welcome back to a brand new video by Vertex Investing. Tan's here. So today, actually before I get anywhere, I just want to say again, just take a moment to appreciate everyone that's watching our videos, subscribing, liking our videos, commenting, sending us daily messages about how you're getting on. I mean, your messages are always welcome and it's really good to see. It's the fact that you guys are taking so much value from the free content. It just makes it all worthwhile and makes it worth doing. And so I just want to say thank you, and also thank you to everyone who's subscribing and liking our videos. So in this video I want to talk about trading with opinions, and I'm sort of going to broach into the fact why I trade using rules. And the reason why I'm making this video is purely because I've noticed something that comes up between some of our new students and some of you guys messaging us from the free content, and I sort of question myself, like, why are you doing it? But then it makes sense. So for example, right, if you were to trade based on opinions, right, this is what you'll probably see, and this is what happened. Say for example, okay, you saw this mitigation play here, right? You probably could have got an entry here. Okay, actually, well, there was an entry, but say you got an entry here, and then you see that price is struggling to break this high. Okay, that's the structural high, right? Because obviously in terms of range, we got the range from here to here, right, on the 4 hour. Now bear in mind our invalidation points are here and here. So if you're taking this trade, you should be aware where the invalidation points actually are, right? Invalidation point 1, invalidation point 2. If price breaks up here, price is going to continue bullish, right? In theory. If price breaks down here, okay, that invalidates the bullish move and it's potentially going to turn bearish, right? That's just our first indication. So with that being said, so if you have taken the trade with that being in mind, right, this struggling to break the high, right, but then you see a minor low being created, then it struggles again, although it does reach the high, and then it impulses down. Now this impulse for some reason triggered a lot of people to start looking for sells. But why? It makes no sense. If you know your invalidation point is from here to here, right, why would you start looking for sells if it hasn't broken the invalidation point? Right? Same thing here. For example, when this high actually got breached, your range would be from here to here, for example. Your invalidation point is here and here. So why would you start looking for sells if it's only done this? Think logically, because where's price actually reacted to? Reacted to an order block that's sitting there. So why would you start looking for sells if it's not invalidated? That's the main thing. So in terms of rules, and the reason why I traded rules is because for me to look for a buy, I need to have a certain criteria. For me to look for a sell, I need to have a certain criteria. And breaking these invalidation points, right, breaking the ranges is one of those rules. Okay, so this is something you can do using the free strategy. Is understanding the ranges. Once you understand ranges, you can do so much with it, and you can have a better understanding of the market. If you don't understand ranges, you will struggle a fair amount to actually progress using this strategy. You have to take away the whole opinion-based trading, because we don't do that here, right? And that's the main reason. Well, I don't do that here. Well, none of our Vertex students should be doing it. As far as I'm aware, they're not doing it unless you're new, unless they're new. But you know, the main thing is, the reason why I traded rules is because I don't want to guess whether I'm looking for a long or whether I'm looking for a short. For example, I don't even know what this is, but someone vandalized my trading view. There, it's gone. Right. So for example, right, let's say you had a retail strategy, background, and you were trading like this before. So, okay, so you've got this, and then this is what I've seen in the past. I've never traded these. Why is that? I've never traded these strategies before, so I don't actually know. But for example, this is how what I see on Instagram. So I see this. So people have projections, right? So they say, okay, this is going to be the third touch and price is either going to go this way, or if that fails, it's going to do this, a break and retest, right? So you have two opinions, which is fine. You have two options for a trade, but the problem is, why would you have two? Like, it doesn't make sense if you think about it. Why would you have two options where one is going long and one is going short? What that shows for me is indecision. You don't know, you don't understand the market, and you don't know where it's going. Okay, I've never understood that. I'm not saying, by the way, I'm not saying that you directly. I'm not aiming at anyone. I'm just saying that I can't. I can never understand this. I can never understand the fact, where there's uncertainty. You don't know. Okay, yes, with our strategy, we didn't know that price is going to respect it, right? We don't know that. However, we are trading with market facts. This is based on probabilities. Okay, this whole break and retest, or this third touch trendline, Fibonacci, EMA lineup to go along, to continue, right? It's all based on probabilities. But how does it make sense to have your backup plan as the opposite trade? And this is where it comes to, in terms of liquidity. If you think about it, the way that we see it is, when you get this situation, right? Remember, there's liquidity sitting below because of breakout traders, and the liquidity is sitting above, right? So what tends to happen is you can just get something like that. Okay. So it's triggering these breakout traders that are breaking out here, right? And it's triggering these long traders that are trading the third trendline tap, for example, and it takes them both out. And then that's where we come in the market looking for an entry point here, right? Simple, because we are following structure. We're following what actually happens in the market. We're not trading based on opinions, which is why trading with rules allows us to do that. So one of the main rules that you guys need to remember is, once you identify where your ranges are, you need to think these are your invalidation points. If you look on the daily on, this is GU by the way, so if you look on the daily, for example, the daily low is this one here, right? For price to go bearish for long term, you need to break this low, right? Look how far it is. Why would you start looking for a sell, right, when price has only done this? It's only impulsed and broke to minor low. It doesn't make sense, right? So think about that. Understand what range you are in, and then you can think about your bias. Now remember, your bias should come from the higher time frames, like the 4 hour or above. Okay, for me it's the 4 hour daily or weekly that gives me that bias. Okay, so even though I can go counter trend, for example, by the way, this is not a signal, but I'm looking to go short from here, right, to the daily order block here to continue long. Why? Because I can go short because it follows the criteria. Not yet. I need to wait until price gets there. But why am I going long? Because that's the overall bias. You need to understand what is counter trend and what is your pro trend. Once you understand that, you can take a buy sell buy sell buy sell with that intention, with the fact that, no, not intention, with that understanding in mind that you know where you are in space, you know where you are in a range. Because if we're going to talk about range plays at this point, right, I'll go through it quickly. So for example, that was the high that was created, right, and then we had this impulse, and then that went on to break structure here, a new range from here to here. Okay, and then we haven't broke this range until we came here, depending on whether you see that as a break of structure or not. I mean, that's up to you. But if we think about what's actually happening, is we're forming this whole sort of consolidation period, and then we're just breaking structures here. Again, it does depend on how you're seeing your ranges. But now what's happened is we had an impulsive break of this low, so the range now is from here to whatever low this creates. Whether it continues to go low or not, because it can do, and it can come to our point of interest straight away, or it can pull back a little bit, and then we can continue the short until we can start going long. But you need to understand where your ranges are and where the invalidation points are, because if price goes on to break this, that's invalidated this whole order, this whole position, and then I could start looking for the next trade. But if you think about it from a daily perspective, let me get rid of, look at all this, there we go. If we're thinking about it from a daily perspective, for example, we've got the daily range is from here to here, right? Invalidation point for us to look short is to cross here, Okay, that's invalidation, and that's invalidation of this whole trade. If price goes into break, then that's not going to be our point of interest anymore. Why? Because the range wasn't broken by this one, it'll be broken by something, whatever happens here. Say for example, if this candle, right, then creates an order block, right, which is going to be, say it creates an order block, oh god, sorry, say if it creates like an order block here and then it continues to break, that's going to be the new POI. Why? Because our range is going to be from this candle low to whatever high is being created. So once you understand your range, you can understand what invalidates your order. Okay, that's the main thing. And get rid of the whole guesswork of trading. Okay, start implementing rules to your trading, because I've just shown you. Because for example, another thing actually that I'll mention is, a lot of people are probably thinking this is very overextended, right? It's very overextended. Does it matter? No. Why? Because with this thinking in mind, you are thinking with a retail concept, strategy way of thinking. The fact that it's probably forming, I don't know, I don't even know what these strategies are called, but I'm sure this is something where you have like a, is that a pennant? I don't know. Or I don't know. I'm not going to try and name it, but say you have this forming and people are going to start doing that. What's going to happen is, for example, say if it does do that, yes, they probably can get a good move, right? But then they're going to start holding, and then price may continue because of where price should, in theory, react off to. Okay, the way the markets are run, you have to understand that with these strategies, how have I only got rid of one line? I have no idea. Oh, I was gonna get rid of everything. With these retail strategies, right? You have to realize that it's all, it's all understood and it's all based on probabilities. It's not actually based on market facts. Whereas the way we're trading with order blocks and using smart money concepts, we're trading based on market facts, which is why we could be more precise with the way that we trade, because we are following structure, we are following the money. And that's essentially how the markets are moving. Okay, so the main thing is you want to have a sound understanding of how the market is actually moving. You don't want to do any of this guesswork. You want to understand what you are seeing, and you want to trade what you are seeing in front of you. So what I suggest doing is simply just looking at a chart, just go back to a random date and just look at certain moves and ask yourself, why has that happened? For example, right? For example, let's look at this bearish move here. Why has this move happened? If we go across, what can we see? We can see an order block and a clear break of structure. Does that make sense? Yes. Okay, that makes sense. Okay, you're building that understanding of why that's happened. Okay, and if you think about it in terms of ranges, right, because remember, ranges are key, is you are forming your range. Okay, that's your high, that's your low. You're waiting for invalidation points. Okay, if price breaks that, you can potentially start looking for a bullish trade. But if price breaks this, you're trading a continuation to the bearish side, right? And that's essentially what's happened. And then what we can see here is, once we've broken this range, we create the range from here to here, we can probably start looking for a trade somewhere in this point, right? What happens? This range gets invalidated. Okay, and now what does that mean? Okay, yes, we were bearish before, but now we've broken the first sign of validation, and we've broken up to the bullish side. What do we need to confirm? We need to have another break to confirm the break of structure. So the range is from here to here, right? Then this range gets broken, bullish. Okay, confirmed, bullish, ranges from there to there. Price reacts, that's a very big order block, but price reacts to the order block and then breaks that range. Okay, does that move make sense? Yes, it does. Why? Because it didn't invalidate the range, and it proved that the bullish range was sufficient. Okay, it was correct, so that move made sense. Now let's find the next range from here to here. Okay, then price again breaks the bullish range. Yes. Does it make sense? Yes, it does. Why? Because price came and reacted to this order block, right? There we go. It makes sense. It didn't invalidate the range. It validated the range to the bullish, and that's where we're expecting price to go. Then let's create a new range. We have a new range. We have a high, and the range is, say, here. Okay, we invalidated it. We're going bearish. Okay, can we look for a sell? Yes. Why? Because it's gone bearish. It's broken, and it's broken the bearish move, right? I wouldn't, depending on how you want to look for the trade, I wouldn't take a risk entry on here. But you could probably look for a confirmation entry, but you do get that move to, meet the end of the range, but it doesn't break. Okay, this move does make sense why it reacted off here. Why? Because it broke the bearish range. Okay, it broke the range bearishly, sorry. So that bearish move, this move from here to here made sense, right? Although it didn't break, it does mean that it's showing that it's not strong enough for a bearish move. But let's think about the next range, about what's happening. Whether you took a trade there or not, I mean, it's up to you. Whether you set your TP, I would set my TP at the end of the range, so it would have hit anyway, and it would make sense taking that trade. So the new range is going to be from these invalidation points from here to here. Price didn't break, price then broke bullish, and the new range is from here. Okay, then we break a bearish, right? Where did it come from? Okay, it came from here. You got the new range from there to there. Price reacts from here. Does this bearish move make sense? Yes, it does. Why? Because you just broke the bearish structure, right? You broke the bearish range. You find where it's come from. That's where it's reacted, and it's gone. Okay, let's go to the next one. Let me get rid of this and this and this. So the next range, let's carry on. So we've just broken this bearish range. Where did that come from? It's from here. Okay, so should we start looking for a trade here? Yes, we can. But what happens? It gets invalidated, which is fine. It creates this high, Okay, now to confirm it, again, you can start looking for a trade should you wish, depending on the strategy. I mean, we can start looking for a trade using the Vertex method. It's up to you, but price reacts off here. Okay, so we can look for the trade and we can take it. Now that it's broken to the bullish, it's broken the bullish range. Okay, it can continue. Now we create a new range. We create from this high to that low, invalidation points. Okay, does that move make sense? Yes, it does. Why does it make sense? Because it initially broke the bullish range here. Okay, that move here. Okay, came back, retraced, reacted at the order block, and then continued. It makes sense. Again, let's go to the next one. The next range from here to here. It breaks bullish. Where's the range from here to here? Okay, that one. Then it breaks. All right. Price didn't come back to the order block. I can't actually see the order block. I should probably zoom in a little bit. There we go. You can probably see it better. Oh yeah, okay, it does react to an order block. So this order block here reacted and it carried on, and then again he broke structure. We formed a new range from here, where's the low, to here. Price reacts something here. I'm doing this very roughly, by the way. Price reacts here. Does that bullish move make sense? Yes, it does. Why? Because you have this bullish impulse which broke bullish structure. Should we start looking for sales? No. Yes, it's very overextended. Should we start looking for sales? No. That's the question. Why? Why should you start looking for sales? You've got no reason to. And I'm doing this all on one time frame, all right? Okay, so now we've broken this whole, this bearish move. Now we've got this structure. Then our new range is from there to there. Okay, then we broke again. So the new range is from there to there. So can we start looking for buys? Yes, we can, but you probably wouldn't find an entry depending on what type of entry you take. And then you break. You create a new range from here to here. Can we look for sales? Yes, you can. It does react to the order block here, but it doesn't really fulfill. So okay, obviously you failed on this one, which is fine. Okay, then you form a new range. Okay, what breaks first? You create this high. This high was created by this low. Apologies for that sound. You create this high, right, and so on. I mean, okay, this one would have failed. Then you create a new low. You got this range. It's all about ranges and understanding. I realize I'm pretty much saying the same thing, but I'm trying to say is just go back. Apologies, guys. Apologies. I didn't realize the notifications were turned on. Well, actually, I don't know if the mic can pick up on that. I'm not sure. That's a good question. I don't know if that will come up in the recording. If you can't hear the notifications, then then it's probably going to sound like I'm talking rubbish. But essentially, what I'm going to talk about is what I'm going to summarize is just go back, look at certain moves, and try to understand, does that move make sense? And this is part of your back testing, and just tick which ones make sense to you, and you'll understand the market so much better by understanding the ranges, understanding that invalidation points, right? But for now, I am going to leave you guys be. I hope you found this video useful. I mean, I kind of freestyled it. I didn't really know what to... I only had a short topic to talk about, and then I decided to talk about ranges, and I didn't realize I'm going to talk into that much detail. So I hope you found it useful, and I hope that you all stay safe and take care as well. And also make sure you like and subscribe if you like the video. If you don't, then don't. Yeah, make sure you subscribe to the channel so you don't miss any of the free content that we share here on YouTube. Also, feel free to join our free Telegram group. The link is below in the description. And also, if you want to join our mentorship and understand our strategy and our concept, our rule-based method in a bit more detail, well, not in a bit more detail, in a lot more detail, and have access to speaking to me daily. I'm not sure if that's a good thing or not, but feel free to join our mentorship via the trade membership, or you can join our February bootcamp, which is on the 20th and the 21st of February. More information is on our website, which is in the link below. But for now, take care guys, and trade safe.